Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Mish Schneider, Director of Trading Education over at MarketGauge, to discuss if there really is a debate necessary as it relates to a recession. Mish, it's great to see you as always, and we are in a huge week this month. We have earnings, we have macro data, including GDP, a bunch of key tech earning reports coming out this week. Of course, the Fed interest rate hike decision. There's a lot going on this week, and it all comes back to, are we in a recession now? And does it really matter as we look ahead?
Okay, yes, there is definitely a lot going on this week, and we've had some pretty much more on the bad news side than the good news side. Walmart, of course, being great disappointment. Shopify, consumer confidence came in lower. Home sales came in lower, while actually home prices went up. And with the Fed meeting being probably the pinnacle in terms of what's going to drive possibly what happens from here, all we can do right now is look at what we see in front of us. And what we see in front of us right now is definitely inflation. And it is definitely impacting consumer. With Walmart, we saw what happened. A lot of it was based on the non-essential goods that they had stocked up in inventory that did not move. And so that does bring into question what's going to happen with the bigger tech companies, particularly Amazon, which of course is more consumer related. So in terms of inflation versus recession and stagflation, what we've seen to date right now is the consumer has actually hung in there pretty well. Some of the consumer discretionary area moved up and held major support along with the entire market. And we're getting very mixed signals here in terms of the recession, because recession textbook definition we know is 2 quarters of declining GDP, but the government, and myself even before the government, came out and said, is this going to be the classic textbook recession? Because the consumer isn't as bad as one would think, could get worse, of course. Number 2 is labor still has some pockets of real strength. And number 3, even though we're seeing a decline in housing, is it going to be the big crash like what we saw in 2008? And those, I think, are the questions we have to look at. So Fed, what are they going to do? Consensus, 75 basis points. If they go much more aggressive than that, which seems unlikely, but if they did, obviously that could be a big kibosh. What's more interesting is the expectation that the Fed funds rate might peak soon and then start to go down as we get into 23, 24, which of course then brings back the whole idea of inflation and stagflation. So we're kind of in a circle here. Good time to really be in cash.
Yeah, and let's talk about the dollar for a moment here. I mean, we're starting to see how that is impacting earnings of these larger multinational conglomerates, and in fact, a number of the retailers, to your point earlier. So when we think about tech, huge week this week, those Nasdaq 100 heavyweights are reporting. How do you think they could potentially be impacted? What are you going to be looking for out of those earnings reports?
Mostly what the CEOs say after in terms of the conference calls, because we know that the earnings are going to be somewhat back looking, right? They report of how things have been over the last several weeks. So it's really going to be the projections of what's going forward, which is exactly what happened with Walmart. During the conference call, the idea that things weren't going to get better anytime soon really was the greatest impact. So Apple is something I'm going to be really interested in seeing what it does, because we know already that Apple has had a slowdown in terms of iPhone sales. We also know that there's been supply chain issues, but we also know that Apple has actually held up relatively well over the last few weeks. So I think if they come out and say that because of the fact that they can't import materials from China because of the cost of the dollar, et cetera, if they're firing or laying off people continues, and if they think that the sales are going to continue to be soft, that's going to be, I think, a really big key of what happens to the overall market, particularly the consumer discretionary. And let's face it, GDP, right? 70% is really what happens with the consumer here. And so it's very dicey right now what's happening in the market, and yet not completely unexpected, right? Because we've talked about this, Jill, that everything was in such bloated valuations over the course of the year with the 0 interest rates. This is not really so surprising that things will find some fair value. And that to me is the silver lining. At what point fair value comes in, and then we can go in and say, okay, time to buy the stock based on reality and not corporate buybacks, low interest rates.
Right. And Mish, let's talk about your wheelhouse for a moment here. Commodities. What are you seeing in that space? You've seen a short-term correction here, but again, if you think the dollar is potentially peaked, could there be room to run with the commodity complex.
And that's, I think, the biggest thing for me right now is I still think that there's a great potential for another super cycle to happen in commodities for many reasons, geopolitics being really probably the top of the list. Ukraine war certainly isn't ending anytime soon. The oil, we released more reserves today in the United States, but does that mean we're going to have to buy them back at a higher price? Very possible. And of course, we still have tremendous amount of issues with Mother Nature between floods and fires and drought. So I do believe that we're in a situation right now where you have to keep your eye on what happens, particularly in the energy and food prices. They've come off, but not by that much. And if they start to accelerate again, and the Fed doesn't really do anything too aggressive because of the fears of recession and what's happening with earnings and consumers, then there you go. There's your super cycle of commodities to be on the lookout for.
Right. And to wrap up here, putting all of this together, and it seems like everything is happening at once this week. What do you think about the market? Are we in a trading range, let's say, for the remainder of the summer, or at least in the near term?
Well, it seems definitely in the near term. We broke some key resistance areas in the overall market. If we just look at the SPX, for example, and now it's really testing that 3,900 level, which is its first key area of support after the breakout. I'd call that pivotal. But even if we come off here, again, unless the Fed gets super aggressive and says, we don't care about recession, we're just into fighting inflation, we could possibly just continue in this range for a while. Because let's face it, if the slowdown's not going to be much worse than what it is, where are we getting growth? That means stagflation. Once again, that means trading ranges.
All right, Mish, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.